Hey traders, Raghi here, and in this update I want to take on a couple topics that I've been getting a lot of questions about, and hopefully this will help a lot of you out. And they're really centered around, well, on Tuesday we did a video called Bounce or Bottom. And I think a lot of you know after watching that video, that was really an 11-minute plea for me to encourage traders not to pick a bottom in a downtrend, but rather to short the rip, to short those rallies, to short those retracements in the environment. So, and I by no means knew this was going to be the next two candles after that video, but that is the probability when we're in this kind of structured bearish momentum, bearish trending market. So this isn't any kind of prediction. This is process, right? That's really been the theme for the week. This is going to be the theme for your career. Process over prediction. This is not about where is the S&P going to go. Hint, nobody knows except for Powell. And he's not talking, right? Nobody knows. So it really doesn't matter. What we know we can do is wait for rips higher and short into those. And that might be the NASDAQ. That might be the S&P. That might be the Dow. It could be any one of the sectors that are heavily weighted within those indices that are also in double red downtrends. The other thing that is oftentimes the question is, well, Rob, while we're waiting for those retracements on the daily time frame on a stock or a sector or the index futures, what do I do? What do I do when there's nothing to do? And that's where you can shorten the time frame and consider day trading. The other reason day trading is really interesting in this environment is for a lot of traders, they realize that downtrends are far, far more volatile. I won't say difficult, but they are far, far more volatile than uptrends because the short squeezes, those rallies, those rips can be violent because people are out there still persistently bottom picking. That's the nature of every bottom, every downtrend, this bottom picking mindset. It's going to be the nature of every downtrend from here till forever. That's just part of the game. So for a lot of traders, they're concerned over the volatility of the current market behavior. And they don't want to have to commit to longer term time frames where we need day after day after day, even week after week of continuation, of follow through. Well, what if we can simply just say, all right, we won't be as concerned about day after day and week after week of continuation, and we'll just be concerned about whether or not we can take a trade that, say, sets up sometime after 9:30, and then we start winding down around 11:30, right? And for those of you that know how I day trade, that's a pretty familiar process, right? That process of the 9:30 to 11:30. Now, one of the questions I get, and we'll tackle this too, is, Rog, is there a way to trade outside of those 2 hours? I know you don't like to, because at some point you're going to go look at daily time frames in the afternoon and set up some of these trend following trades, which we have in things like the XLV, right? There's a short the rip, right? Or things like Citi, right? Or things like DHI. So those opportunities are there. Could be the euro, right? But what about when we want to day trade for the first 2 hours of the day? Well, I'm going to walk you through exactly what we did this morning. I like to start the day around 9:30. I'm not going to do a lot of pre-market trading, but you can. And I'm going to talk about some of the things you can do. Now, when we are below the line in the sand, which is really based on the previous session candle and where the current candle is in relation to it, I'm going to prefer certain sides of the market, long versus short. Well, I clearly preferred the short side, especially around the 39.14 area. That was the line in the sand today. So if we were doing battle in that area, that was really resistance. Well, when that line in the sand then leads to where we traded up into, which is my hourly price movement range. This is a process which subsequently became an indicator. It's a process that I created back with my third book. And then when we were doing a lot of currency trading around Forex, I had historical volatility data, and we created this little, not to sound fancy, but it's an algorithm. That's all. That's just math, right? It's just math. And so This allows me to look at a time and volatility-based resistance and support. We traded right up into it. Just after the clearing. Clearing meaning that time between 9:30 and 10 a.m. Eastern. And we move lower. This is where we either buy SPY puts or SPX if that's the way you want to go, or short the ES or short the MES or buy puts in ES. That's 5 things you can do up in this area, right? That's your choose your own adventure. Micros, minis, the ETF, the SPX, and options on whatever's optionable, right? That's the zone. We travel from one end of the zone to the other. We scale out, we trail a stop, and then we look for the next level down, which actually never came. I got trailing stopped out here at 39.04.5 after we hit that 38.90 target with an entry, really 3 entry opportunities in that area. That's the trade. Okay? Now, if you have my V-score, which many of you do, a lot of you have been asking, Rob, where's the V-score? One of the things that we've been doing a lot of in these videos and in the room is not making traders feel like they have to go run out and buy an indicator. If you have that indicator, gang, I've got 9 monitors that I'm sitting in front of. And right now, 1, 2, 3, 4, 5, 6, 7, 8 charts across 5. Actually, no, I take that back. 10 charts across 5 monitors are running my sub-market sonar tools, my V-score. But one of the things I really wanted to do in 2022, especially when the markets got difficult, is not make traders feel like they have to go run out and buy another secret squiggle. You don't have to. There's a huge number of these I make available for free to members. And by the way, this HPMR for the NASDAQ, the S&P, the Dow, and the Russell is one of them. I make it available in the futures room. I make it available in my Sector Secrets Mastery. So these are things you can use, once you're in the room. So that's really exciting, knowing that you've got everything you need, right when you're in there. But okay, so now what do? I mentioned that we can talk about pre-market and the afternoon. These same levels apply. The same understanding applies. So let's talk about the afternoon, right? So fast forward. I don't even want to think about. So just like in the morning, it's 9:30. In the afternoon, it's 1:30, 1:45. I don't even want to think about anything until about that time. So I'm not just jumping into the market at 1:45 Eastern. So it's Eastern time I'm talking about. I'm not just jumping into the market. I'm taking a look at how we're coming out of lunch, because we're really only coming out of lunch by about 2 o'clock. All right. We got the bonds closing at 3. So I'll start paying attention from about 1:30, 1:45 into 2. Right. Then we've got 2 hours to look at the last half of the day. So 2 hours in the morning, 2 hours in the afternoon, avoiding the lunchtime, the midday doldrums. And it's just the same thing all over again. Neutral environment. Where are we in relation to that 39.14, which was that line in the sand today? Kind of doing some battle in that area, support level, and then take it to the resistance level. Now, I will say, because we were above 39.14, I was not looking for the short. Now, aggressive traders can do that, but see, this kind of thing will happen and could shake you loose before you get a sell-off. So being a one-way day trader is really important. That's probably something I should also put in the notes. So we talked about what is day trading, just being flat by the end of the day. What time frames, 2 minute, or 5 minute, which indicators? I'm using time and volatility here. Time is a big one, right? Time is a big one. 9:30 to 11:30, and then 2 to 4. And then the morning I'll look at around 7 to 9, and there's another window from 4 to 7, which I don't love because that's after the Asian session closes and it's before the New York session, or at least that first cup of coffee in New York at 7 a.m. really kicks in. But we just want to be flat by the end of the day. We don't want to have to care about session after session of clarity, right? So I hope all that gives you something to think about as far as, while we wait for that next rip to short into. right? And if you're not sure what I mean by that next rip to short into, go back to the Simpler Trading YouTube channel. Check out Tuesday's video. I think it was called Bounce for Bottom, and you'll get an idea of how I'm looking at the daily time frame. So in the 2 videos that I have with you each week, I figured we'd do a little bit of the short term in this Thursday, and on the Tuesday, I pretty much for 11 minutes pleaded with everybody is to focus on the shorts, on those double reds, and find the rallies that we can buy puts or short into. And I'm probably going to sound the same way next week. Okay? Join me for Charts and Coffee in the morning. We have these conversations 9 to 9:20. Answer your questions. Take a look at what's happening. Gang, write this down somewhere. Process, not prediction. Let's focus on the process. Hopefully I've given you an idea into my process for what's happening right now. Be good to each other, gang. I know the markets are tough. Let's, work together, support each other. I'll see you in Charts and Coffee. Smash that like button. Leave your comments, leave your questions. I appreciate your time, and I'll see you in the next update. Hey traders, Raghi from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.